Alright, you're welcome. This is a continuation of the um, zone qualification and specifically talking about strength of the move. In the first part, we spoke about the things you really need to see how to spot strength in a particular move. You know, if you have not seen that video, please go back to that video and get accustomed to that, because in this particular one we are going to be looking at chart situation. We're going to be looking at chart and see how those moves are being represented on the chart. Okay, all right. Now, the first thing you notice looking from the left of this particular chart is that you see a couple of moves between between bearish candles and bullish candles, and they are not really um big bodied candles until you go to this particular place. Right now, price simply just accelerated to the upper, rallied up and formed a base around this particular place. A doji candle was formed. All right, and the next candle that you saw is what was this very big bearish candle, followed by another bearish candle. If you look at the body of this candle, you see that it's really very big. And like we discussed the other time, that when you see this kind of big bodied candles, what is that telling you? It is telling you that there are institutions present in that particular place. Okay, all right. Now, as you can see, this is going to be your order block, right? The doji candle. The doji candle before that big move to the downside is going to be your what? Your That's going to be uh your your order block, okay? And of course, you're going to mark that particular place out. Particular place was what was already marked out. And look at what happened when price retraced back into that particular zone. Look at what happened next. A very large, a very big move. Actually, what was the result of that particular place? So the strength of the move is really very important. It's really, really very important. That's the first thing you want to look at. Okay, so when you want to look at that, then of course you're going to watch price. When price get back to that particular zone to mitigate the rest of the orders. Okay, you know to mitigate the rest of the orders left by the institutions in that particular place, then of course you know that you are actually looking at a very tradable zone. Let's quickly move on and see another example of a weak supply zone. We're still talking about strength of the move. Now, like always, we're going to start looking at the charts from the left hand side. Okay, now when we look at this chart from the left hand side, you can see a lot of rejections on this candle. Look at this week. Look at the week on this bullish candle. Look at this small bodied bearish candle, followed by another doji candle. Basically all of these moves are telling you that there are no institutions present in the market at this particular moment in time. Nothing much is actually happening around this particular point in time. Now, look at this. When price began to move to the downside, you can see that there were a whole lot of rejections too along that particular, along the line when price was actually, going and going to the downside. That's still telling you that, well, that supply zone, even though price was actually going down, the supply zone over here is what is the weak one, because look at these candles, they are small bodied candles. This one was a small bodied candle with a very large wick. And what do we say when we say when you see wicks like this? Wicks like this is talking about rejection, all right? Still talking about the psychology behind uh this particular candle. It's actually got rejected by buyers in the market. Okay, now price rallied up again, still small bodied candles all over again, until we go to this particular area. Now there is where we saw a very big bodied candle that moved massively to the downside. Okay, now when we see this kind of big bodied candle that moved massively to the downside, then of course we can stop by around that particular area, mark out the previous candle, the immediate previous candle before that large move started. Then we are going to mark that particular place out and wait for price to mitigate that particular place. Mitigation simply means price retesting or coming into that zone that we have marked. That is the meaning of mitigation. Okay, so when you hear me use that word, of course you should know exactly what I'm talking about. All right, so let's quickly move on. All right, let's see another example of a weak zone. Like as usual, we are going to start looking at this chart from the left hand side. Like I tell you that anytime you open your chart, look at what is happening on the left hand side, and of course it's going to tell you exactly what has been happening before you get on the chart, and that is going to inform, you know, going to inform what you're going to do you know all right, so let's look at this. These are still small bodied candles. All these bearish candles, they are small bodied candles. All of these bullish candles are small bodied candles. You didn't really get so much until this particular move, all right? But of course, just because, I mean, look at what happened next. All of these bearish candles simply just, full of rejections, dodgy candles. Dodgy candles, what do you say about dodgy candles again? That they are actually indecision candles. There are no power in them, meaning that both sellers and buyers, they were at equilibrium, you know, during the session that doji candle was being formed. So we don't really see those big bodied moves, those big bodied candlesticks that is actually telling us that we have institutions in the market at that particular point in time. Now look at what happened when price pulled into that area for mitigation. As you can see, the price simply just pushed through that particular place, of course, and it simply just rallied to the upside, meaning that that zone failed. Why did it fail? Why? Because we know that this particular zone right there was a weak one, full of rejections, resistance, a lot of indecision along the way when it was actually moving to the other side. So let's really look at another example of a weak zone. Now again, looking at it from the left hand side, you can see a whole lot of small bodied candles, a mixture of bearish candles and bullish candles. Of course, as you can see them, it's just a mixture of all of that. Now, if you are marking this area as your demand area, just know that it's not a high probability, it's not going to be a high probability setup for you. Why? because you can't see the footprint. Sorry, you can't see the footprint of institutions around that particular place. So there's every likelihood that that zone is going to fail. So let's move on to the another strength of the move. Now, as you can see that this is a very, very sweet move, a very strong move. As you can see, the price actually came in to, I mean, rallied up to this particular point in, yeah, I mean, to this particular price, and there was a huge supply. There was a huge supply that led to a massive drop in price. Okay, so a massive drop in price. You can see that the candles were big. I mean, followed by each other, very big candles. Now, what do we do? Well, we just have to mark out our order block, or you call it basin candle. Now, our basin candle is actually going to be this particular pin bar before the huge drop to the downside. Okay, that pin bar, that bearish pin bar before the huge drop, that is going to be, that is going to be our order block, or you call it basin candle. And of course, that zone becomes our point of interest. We're going to wait for price to pull into that particular place to come and mitigate the rest of the orders of the institutions around there. And you can see when price came in there, what happens again? The price simply just what dropped again to the downside. All right. Okay. So here's another example, a very quick one. Now you can see a demand zone here. Look at this bunch of candles before this upward movement, and it was a very huge one, and it broke. I mean, it's a very huge one to the, to the upside. And when price came back to mitigate it, what happens again? The price simply just went up. Now, this size of the candle also tells you that there are institutions, present in that particular place. I hope you understand this particular class. All right. All right. So please take this advice from me. Whenever you spot a supply or a demand zone, look at the move and the size of the candles. If the move is fast and the candles are big and strong, you can then stop by this zone and look at it to see if it is worth trading or not. However, if the move is weak and the candles are small, just ignore it, okay? You don't want to lose your money in the market. All right. So this is going to be the end of this module. I'm going to see you in the next one.